Hello everyone. So today we'll be talking about liquidity. Now, the concept of liquidity is such that if you understand this concept, it's going to aid you to become more profitable than an average trader. Now, liquidity is just an identification of areas in the market where funds are actually resting. That is where the retail traders are placing their orders, their stop losses, and the rest. So it's usually where their money in the market. So if you really want to trade liquidity, you have to understand the concept of previous high and previous low. So let's look at a diagram showcasing what liquidity will look like. So let's assume that the market is moving in this direction. All right, we had the market trending higher, and you can see that this market is actually trending higher. So this high, which was a previous high, was broken. For those of you that understand market structure, it was broken here. This high, this previous high, was also broken here. But if you look at this trending market, you will discover that this low, the lows are left intact. So this low is actually left intact, and this low is left intact. All right, and this low is left intact, and this high is yet to be taken. This high here is yet to be taken. So for retail traders, stop losses will be around this zone. So someone who is in this trade might leave his stop loss here and continue to trade with the trend. Another person that entered the trade here will leave his stop loss here and continue to trade with the trend. So the big institution will be looking at, before moving this market higher, they may decide that they want to do something like this. In other words, they want to create something that will engineer the up movement. They may decide to move the market lower, taking out the stop loss, resting there, then continue the market higher. So you can see that those people who stop loss are here, by the time the market comes down to this zone, it will take out the liquidity around the zone, which will engineer the upward move. So you really need to understand the concept of liquidity for you to be able to trade better. So I'll be showing you another diagrammatic example for you to be able to understand this concept of liquidity better than what it is, because we'll be going into the live chart very soon. So when we look at liquidity, if we have a candlestick like this, if we have a candlestick that appears like this is a bullish candlestick, all right, and the next day we are expecting that the market will continue higher. But what we saw the market did was something like this. Now let's make this a red candle. What the market did was to have a wick. All right, wick to the top. So this wick actually took out the previous day high. Let's call this PDH. All right, let's make this PDH. Right. Let's reduce the size of the text to 16. All right, this is the previous day high, and we also have the PDL, which is the previous day low. So let's label here the previous day low, PDL. All right, so meaning previous day low, you can just put that in your notes. So what we have here is that instead of the market to continue to trend higher, the market swept the liquidity of the previous day high, but the candle did not close above this previous day high. So once the market is engineered this way, the market begins to target liquidity at the previous day low. All right, so that means that there's a difference between a candle like this. All right, this is not liquidity sweep. Let's make this green candle. This is not a liquidity sweep. And then you have another candle closed like this. All right, this is not what we call liquidity sweep. This is like a continuation pattern. All right, so don't mistake the two. All right, so this is a liquidity sweep. So this is a liquidity sweep. You can see that the structure was broken here, so this is not a liquidity sweep. This is not a liquidity sweep. This is a continuation pattern. This is an example of a liquidity sweep. All right, so once the liquidity is swept, the previous day high is swept, then we begin to target the liquidity at the previous day low. So this is basically something you'll be seeing in the market on a regular. So we'll be looking at live charts to go more into detail about what I just explained. So let me delete this. All right, so we'll be looking at the Bitcoin chart, Bitcoin Cash chart, which occurred today. And if you look at this chart, you'll be seeing that the previous day candle, which is the high of this candle, I'm going to make this 1. So you can see that if you have to zoom into the high of this candle, you can see here that this bearish candle, if you look properly, you can see at this zone that the previous day high, which is here, the previous day high was well swept. You can see this red candle that it's wicked above the high of the previous day, which is yesterday. So you can see this candle wicked above the previous day high. So when you see this happen, what do you begin to look for? That is what we are discussing today. So let me remove. Now I brought it back to what it used to be. So once the previous day high is swept like this, you need to come to the 15-minute or the 5-minute time frame to have a better picture of what is happening. So when you come to the 15-minute time frame, let me do this. You can see clearly that this was the previous day high. If we'll have to mark out 12 midnight, you can see that by 12 midnight, this is the highest point of the previous day. So by today, the liquidity of the previous day high was swept and there was a break of market structure. All right, so we had a break of market structure happening here. All right, this is a break of market structure. So when you have a break of market structure, the next thing you'll be looking at is for the fair value gap that was created after the break of market structure, which is this. So we have to come to the 5-minute time frame to see it more clearly. So if we come to the 5-minute time frame, we'll be seeing it clearly how it happened. Okay, so you can see that the fair value gap was well drawn. All right, it's now here, and so you can see that the market traded into the fair value gap, and after taking liquidity in the fair value gap, this happened around 6:20 a.m. If you look down here, this is where I see the time. So this green candle went into it by 6:20 a.m. and after that the market breakdown targeting the previous day low. Now if we come to the 30 minutes, let me come to the 30 minutes so that you can see the chart properly. So let me do this. So you can see that this is the lowest point of the previous day. All right, this is the low of the previous day. Yesterday's low was here, and you can see how beautifully the market is actually moving, and the market is almost there, if not already there. Yeah, the market is already there. As that when I was looking at this chart, the market wasn't there. So you can see that after that liquidity sweep, the market began to engineer, after taking out all the orders that was above this place, began to engineer towards the previous day low. Now this is something that you will see once you see this concept happen on your chart. It is a very glaring trading opportunity that has high probability to give you some cash. If you look at another chart, I was looking at the forex pair, the USD JPY, just to show you the USD JPY today. I looked at the USD JPY today, and when I looked at the chart, I saw something similar to what we just discussed in this trade. So when we look at the USD JPY pair, if you come to the daily, you will see that we had something similar happened on the daily. Now, if you look at if you look at the previous day high, if you look here, you will see that there was also something like a liquidity sweep happening here. So once this liquidity was swept, if you look at this, if you look at it this way, you will see it clearing. You can see that this candle actually swept the previous day high. Now, when this is done, you can see what happened, that after that liquidity sweep, if you come to the 15-minute time frame, you will see a break of market structure, and you will see how the market, you can see exactly what we saw with the Bitcoin Cash chart. You can see that there was a break of market structure. There was a fair value gap that was created by that last candle, and the market traded into that fair value gap. And then what happened? This was 12 midnight. Let me just mark out. This is 12 midnight. Okay, we have 12 midnight here. This is 12 midnight, and you can see this is the liquidity sweep happening here. This is the break of market structure, and this is the previous day low. So what you see, this is the previous day low. So the market, after that happened, engineered towards taking out the liquidity of the previous day. And once this is done, that mission is completed, you can step out of the trade. But this is a lot of cash in your pocket for a one day of trading. So this is something that you need to look at the market. Definitely you have to start looking from the higher time frame, from the weekly to the daily to the 4-hourly to the 1-hourly. But when you see this occur on the daily time frame, this is a beautiful trading opportunity, especially when you have all this confirmation working out or displaying itself right before your face. So guys, this is just what we want to discuss today. So I'll be showing you more opportunities and examples on subsequent videos. So guys, this is what I just have for you today. Thank you for watching. I hope you subscribe and like this video. I appreciate your support. Every single one of you watching my videos, I appreciate your support. Thank you very much. Have a beautiful day.